If you can't make a mortgage payment and you're thinking about loan forbearance, watch this video now before you make a decision. Hey guys, it's Peggy here with Frankly Realtors, and I am here today with Leo Anzoleaga of the Anzoleaga Group at Draper and Kramer Mortgage. And I'm really excited to have Leo on because he is an amazing lender. We're doing a deal right now with him, and everything's going smoothly, knock on wood. He's here to talk to us just about what's going on in the mortgage industry and really what you guys might need to know about loan forbearance. I know that's like a huge topic for people right now, especially if you're thinking you might not be able to make your mortgage payment. You've got a lot of questions around that. So I've brought Leo on here today to talk to us about that. So welcome, Leo. Tell us a little bit more about kind of your group and what you do.
Thanks, Peggy. It's a really honor to be here. I really appreciate the time, not only that you've allowed us to talk a little bit about, some of the issues that we're dealing with in our current, our current world, but also talk a little bit about, who we are and what we do. So simply put, I am a lender. I've been in business for, almost 18 years now. And I've built my business strictly by referral. So, I don't buy leads online. I simply devote myself to my clients, and I've built my business, specifically on relationships, right? So currently my group, we have about 5 people on it. Last year we hit a record number in terms of deals that we financed, but also have some lofty goals for this year. But ultimately, our goal is to serve clients with the highest integrity, that we can bring. Number 2 is provide obviously financing needs and answer any questions that they may have, but also navigate them through this entire process smoothly as possible. So Draper and Kramer is an organization, is the organization that has been around for quite some time, and they are the parent company, and they're obviously the mortgage company behind our group. And we've been around for, I think like since 1918 or something like that, something crazy like that. Yeah. So that's a little bit about me, a little bit about our practice and what we do.
Awesome. So tell us more. Let's just get right into kind of that whole loan forbearance.
Yeah.
So if somebody came to you and said, "Hey, Leo, I'm not sure if I can make my mortgage payment, or I know I can make next month, but I'm not sure about the month after that." Like what? And they've been hearing about this loan forbearance. Like, is it something that you just stop making your mortgage payment, or what do people need to know really about this program?
Yeah, I mean, look, a lot of people have fallen into some tough times, and I think it's important to address that this is a very unique environment that we're in right now. With this virus, and it's opened, not a lot of doors necessarily, but closed a lot of doors for a lot of people, right? People have lost their jobs, etc. And there's a lot of people that have fallen in hard times. And so the provisions that the government has put out, and obviously in working with a lot of these institutions, is being able to, push, the mortgage payments out for a certain period of time and allow you to perhaps not have that liability hanging over your head, for 2, 3, sometimes up to 6 months. That said, though, I mean, there is a lot of caution that you have to, proceed with. In other words, there's a lot of things you need to keep in mind. One of which is, this is not free money, right? So the servicers, the lenders that you're currently servicing your loans are simply extending this option to most consumers, to help, but there's not a lot of guidance per se as to what happens next. So one of the things that I want to do here, well, one of the things I don't want to do here is, give you guidance on what you should do in your particular situation, but just an overview in terms of like what is out there. One of the things that we do know is that forbearance is an option. One of the cautions that I would give you is this: there really isn't a lot of clarity in terms of what happens once, the forbearance period ends, right? In other words, typically speaking, if the lender, your servicer, is going to give you time to pay, time to not have to pay a mortgage payment, there really isn't a lot of definition in terms of what happens next. Do you have to pay that back immediately after? Does this get spread over, 12 months? So if you are in that position and you need help, I think the best advice that I can give you is get all the facts from the current service or provider that you have your mortgage with, and really ask those detailed questions, because it's not just about the now, it's also about the later. Does that make sense?
Yeah, yeah, that really makes sense. It sounds like because there's so many different servicers, there's not one answer for like all loan payments, right? It's like you really have to talk to your specific person that you're making your mortgage payment to.
Yeah, absolutely. And hear me out. I mean, I don't think any servicer wants you to default on a mortgage, and create a ripple effect that can affect everyone, right? And a lot of them understand that this is just a unique time that we're currently living in. But at the same time, like they'll be the first, to not be able to give you definition post, the forbearance. So one of the things that I've read, the things that I've been following is, well, what happens after? Like, I mean, do they collect everything in one lump sum, plus interest? And if that's the case, I mean, is there really a benefit to doing this, right? Or do they spread it over 12 months, over 24 months, and allow you to repay based on a new schedule on the mortgage? Some companies, I think I would argue, have been a little bit reckless in giving advice in this regard, because ultimately we just don't know. And so it comes back down to, hey, if you're in this position, I would tell you, contact your servicer, and ask him these specific questions, and see if this isn't even an option for you, or one that's maybe feasible for you.
Right, right. So yeah, so contacting the servicer and just being really clear on
Yep.
what the repayment
Yep.
structure looks like or what it should be, and with that understanding that it could change like next week or something, because it seems like, unfortunately, right, everybody's kind of going along and we're kind of making up the rules as we go, because we
Yes,
never had the situation before.
I agree.
So
Yeah,
yeah,
absolutely.
and it could be a situation where like maybe one servicer is saying,
Yep.
yeah, like you miss, like let's say you have a $2,000 a month mortgage payment and you miss, three, or you don't have to pay 3 months. Is that whole thing due, like, the 6,000 plus your current mortgage payment due at the end of
Yep.
the 3 months? Or I've heard people talking about tacking it on at the end or readjusting your mortgage payment. So there's a lot of options on how to repay, but then really figuring out like with that specific servicer what to
Yep.
do.
Yeah, and I would argue like a lot of people are looking for that silver bullet answer, right? And I think in an effort to get visibility, a lot of like loan officers, lenders, or even like real estate professionals have given advice that I would argue is just not rooted on facts, right? And so what we do know right now is that the best thing that every consumer that is in that position can do is contact their servicer and just get more information. But understand, hey, this thing can turn into a balloon at, 6, 7 months down the road. What then? You know what I mean? Because that has some implications. And I would also argue this. It's a very, very touchy subject because of the equity position that a lot of consumers have right now, right? That's another thing that's public, right? A lot of people have a good amount of equity. Peggy, I mean, you're going to attest to this. In the DC market, in this area that we are in right now, we're seeing record amount of appreciation, even during this pandemic, right? So, could you potentially jeopardize that equity position if something like this is not clear later down the road, right? Like not being able to make those payments. I mean, is that going to force, what I mean? You can go down a rabbit trail pretty quickly. So again, just contact your servicer, get the facts. And if this is something if this is something that is what you need, then obviously move in that direction. But I think it's getting information is the most important piece.
Yeah, awesome. Yeah, and it's not, and also I think it just to remind everybody that if you can make your mortgage
Yeah,
payment, you should be making it. This isn't
absolutely.
some kind of like, oh, let me take advantage and like not make a payment right now.
Absolutely.
You need to make your mortgage payment if you can make it. If you are
Absolutely.
in a fortunate position to be able to still make your mortgage payment. So.
Absolutely. Yeah, good point.
Awesome. So let's switch gears a little bit. I would love to hear your thoughts on like what's happening behind the scenes in the mortgage industry. I've heard a lot of people, a lot of other lenders that I've been talking to and other agents that, when the Fed, slashes the rate, everybody's like, oh, well, the mortgage rate must go down. But it sounded like there was a lot of volatility with that. And I'm just wondering, like, can you just tell like a regular, normal person who has no idea how mortgage rates work,
Yeah.
why is there that volatility, and kind of where you see rates going and like what's going to be happening in the industry?
Yeah, so that's a great question. So a lot of people, even professionals in our own industries, don't really know or understand like what happens with the Fed funds rate goes down to 0 or 0.25%. So the misconception is that that means that your mortgage rate is going to be zero, right? But in reality, the Fed funds rate is actually a rate that the banks use to lend each other money overnight to meet liquidity reserves, et cetera, within the actual institution, right? So, but it doesn't necessarily correlate to lower interest rates. As a matter of fact, typically in the past, when there was any movement with the Fed funds rate, rates actually shot up a little bit. Uh, Now, what brought rates down drastically the last month and a half or so was this issue with COVID-19, actually. So the markets got a little weary, and the rule is this: rates are not determined by banks; they're determined by how mortgage-backed securities trade. So here's kind of the rule: if there is a buying pressure on these bonds, then rates come down. If there's a selling pressure on these bonds, then rates go up. So however these instruments perform on any given day, that's what's going to drive the interest rate for the mortgage. Okay, and so as soon as we started to see some movement, or with this pandemic, pricing started to improve, believe it or not, because money was coming out of stocks and into bonds. In other words, money was coming out of the stock market and into the bond market, safer instruments, right? And bringing rates back down. But it accelerated drastically when the Fed stepped in and started providing liquidity for the marketplace, right? So in the tunes of like $50 billion at one point, per day in certain cases. So that artificially has brought rates down to historic lows. The last time we've seen something like this was in 2016, right around November, September, when we saw the peak of the market and rates were actually at an all-time low then. But around February and March, we actually broke through those levels and hit all-time lows historically, primarily because the Fed stepped in and started buying these securities. So now, in terms of the volatility, that's just a fancy terminology that simply means that the markets are just jittery and just scared, right? It's ironic to me. It's always been super ironic to me how the secondary market works, because it's literally based on emotion, like how a person feels like the market's going, where does these institutions feel like the economy's going, et cetera. So whenever money flows from stocks and into bonds, that's usually when rates come down. And that's exactly what happened. When the Fed stepped in, more people, for lack of a better term, started to buy more bonds and treasuries, and therefore pushing pricing even more down. But 2 weeks after that, or a week shortly after that, that dynamic just kept happening on an intraday level. In other words, that dynamic of buying and selling kept happening because people just didn't have any clue. Here you and I are stuck in our homes. We don't know when this thing is going to end, right? And the markets are reacting real time to the news, real time to the different developments that we're seeing. And you're kind of seeing the fluctuation of interest rates up and down. So, and last but not least, and not to get too technical here, but that created another kind of layer of effect where, things are, products, different sectors of like the mortgage banking sector started to kind of go away. Restrictions started to happen within specific products, things that we really haven't seen in a while. I think though, call me an optimist for the better. Like I think for the better, you know what I mean? But yeah, so products have started to kind of get a little bit more restrictive. Certain institutions started to like put a couple more layers on their overall guidance in terms of lending. So to say that it's been an interesting 2 to 3 weeks is an understatement, because there has been a lot of volatility in the marketplace.
Yeah, it sounds like that. I've heard that like so a lot of the like investor loan products, like things that were kind of not out of the, if you don't fit in the box of like a conventional, 20% down loan, a lot of the stuff kind of outside that box is maybe going away, or has a lot more restrictions on it than your like typical conventional loan now.
Yeah, well, but here's what I would say, right? So and I've actually had conversations about this with, some of my other, partners and business professionals. Like, I think I think sometimes we lose perspective of how things should be, right? If I were to ask you or your consumer or your audience, hey, I need to borrow $1 million, like, would you please let me borrow it at, by only putting 2% down? You probably would never lend me the money, right? So the overall risk of lending money, I think, sometimes can get a little out of hand, right? And moments like this really bring correction, in my opinion, to fair lending practices, right? And so yes, there's some products that I've seen some really I would argue good restrictions, right? So like the jumbo market is one of them. A lot of people are are a little concerned about jumbo products go into a loan to value ratio of 80% versus 85. In other words, people need to put 20% down on these jumbo products as opposed to only 15. Well, I think temporarily, I think that's okay, right? Because we want to make sure, we have a little bit of a baseline in terms of what people need to put down. But the other stuff, I mean, FHA, conforming conventional loans, high balance loans, Freddie and Fannie direct stuff, they really haven't seen that much impact, I would argue, over the last month or so. And that's usually where a lot of consumers actually live, right, within that conforming high balance loan limits.
Yeah. Yeah. So that's good then, that there hasn't been that much of an impact in terms of like a regular person trying to get a loan.
Yeah, and I would argue it's actually the same to some extent. But I would also argue that it's created some amazing opportunity in the real estate market, right? So like, and I don't want to hijack your show here, but like at the end of the day, like what I've seen is more and more opportunity for people to actually purchase a home that otherwise couldn't in the past, right? Like low interest rates, not a lot of competition, and I don't know, Peggy, you've done this, on the other side, but like we were seeing, offers, 5, 10 people in the same home. Now we were seeing 2, right? So it's also created opportunity, I would argue. But again, I call me an optimist. I'm just looking at this via a different lens, especially, from an opportunity lens for the people that couldn't get into a home before.
Yeah, and I think that's what we're seeing, is that I think there was a fear that, okay, like nobody is buying, right? But that's not the case. I was just doing my monthly market update last week, and over 400 homes went under contract last week alone in Northern Virginia. So people are definitely buying. They can get loans. Leo and I, we're in a property under contract right now, and my client, is getting the loan. So that part of it still hasn't changed. There's still, buyers out there looking that need to buy and want to buy. And I think it is like, because our market, our Northern Virginia market, was such a seller's market that, yeah, exactly what you said, like something that would have had 10 offers on, now has maybe 2 offers, and your buyer actually has a chance of getting the property, and I mean, we are seeing, definitely a slowdown. So, some sellers are more motivated, but I think that's balanced with the fact that have been buyers looking for like over a year trying to get something, and they see this as their opportunity to actually be able to buy something, because they see that long term. This isn't just like, oh, let me buy this place because it's a good investment. No, those people that are buying now are more like, I'm starting a family here. I'm going to live in this house for 20 years. I'm going to have my kids here.
Or they're saying, I can't believe I'm in a condo with all my kids and my wife. I need a bigger space.
Yeah,
right?
Exactly. Like, I suddenly realized I need a lot more space now. And so those people are still buying, that they already had that need to buy anyways. And we're seeing that, and those people haven't gone away yet.
Yeah, absolutely. And again, like, I just think like it's so interesting to me that perspective is everything, right? Look, here's the deal. This thing is not here to stay, right? It's going to go away at some point, right? The variables, we don't know exactly when that is. And that's okay. Like, to some extent, like though, interest rates are extremely low. People are realizing, oh my gosh, this could be an amazing opportunity to go out and purchase a home, and the inventory is there. So, if you're in that position, hey, this could be an unbelievable opportunity for you to take advantage of.
And yeah, I think it's also interesting for me because I've been in real estate for 9 years. So for me, even 9 years, I think the rates have always been low relative to, you know, I know other people who have, you know, older people, right? They had like rates that were like 18% or like really, really high, which I just can't even imagine. And so it's kind of like good to get that like longer perspective that, hey, like, even though like, you know, the rate may go from like 3 to 4, you know, as long as it's not like 18 at this point, it's still a really great time to buy.
Absolutely.
Yeah.
Absolutely.
Awesome. Awesome, Leo. Well, thank you so much for coming on and talking to us about all of this stuff. It was very, very interesting. So what's the best way for somebody to contact you if they're, you know, either thinking about, you know, getting a loan, or they just want more information about the industry and what's going on and what they should do?
Yeah, I mean, I think the easiest way would be our website, which is Anzoleaga, ANZOLEAGA.com. And also, I think, Peggy, you're going to put a couple of our handles at the bottom, but like, just look us up, send us an email, send us a text. We'll be more than happy to connect with you, but that's ANZOLEAGA.com.
Okay, awesome. Yeah, and I will put all of Leo's contact information below, so if you want to reach out to him directly, feel free to do that. If you guys want more information about, you know, buying, selling, and just what your specific situation is, feel free to reach out to either of us directly, and we'll talk to you guys soon. Thanks.
Thanks, Peggy.